Before we get to what comes next, where do you think the economy stands right now? On the one hand, it seems to be recovering some, but maybe not as fast as some might like.
I think it's recovered faster over the last 3 months than many people expected. But I think we're headed into a difficult patch. We're headed into a difficult patch because the medical situation's looking far worse than people would have guessed 6 weeks ago. We're headed into a difficult patch because inexplicably the president and Congress were unable to agree on further income support measures for American households and further stimulus to the economy more broadly. We're headed into a difficult patch because financial problems that were postponed in many cases involving homeowners with difficulty on their mortgages or tenants with difficulty on their rents are likely to come to a head in the next several months. So I'm very nervous about the picture looking out 6 to 9 months for the economy unless very substantial actions are taken.
Let me ask you a question of the immediate significance, Larry. You are, of course, an economist. You're not a market trader. At the same time, the markets right now had 2 good days in the equities, and the futures markets right now, Bloomberg's reporting, is moving up, reportedly not so much on whether it's a President Biden or a President Trump as on the projection that actually we'll get a pretty clear answer reasonably soon. Do you listen to the markets on things like that?
I think the markets probably do have some sense of which way things are moving. I think it's hard to separate, David, and I'm not a political scientist or a trader, so I hesitate to say this, but it seems to me that if we got substantial clarity in the next 3 or 4 hours, it would be much more likely to be clarity in Vice President Biden's favor than clarity in President Trump's favor. The most plausible scenarios where we got a lot of clarity soon would be scenarios where one of the southern states tipped towards Vice President Biden. So I think if markets are expecting clarity and they're moving up on a greater sense of clarity, that also probably means they're assigning a greater chance to Vice President Biden winning.
Well, let's talk about the possibility of a Vice President Biden winning. You have made no secret of the fact that in general you're inclined in his direction, and you have served various Democrats at various times. If there were a President Biden and you were advising him, what would you say his #1 job was when he hit the Oval Office?
Well, I give the same advice to any President of the United States, and I would say there are 2 jobs. One is to get an effective anti-COVID effort going, and we fundamentally have not had that. We've had factor of 20 more deaths as a share of our population than Pakistan has. It's inexcusable, and we can do better. And in order to do better, we need to change the culture towards being pro-masking. We need to make pervasive testing available. We need to act on the pervasive testing after it happens. We're not going to get this fixed unless we get COVID fixed. If 1,000 Americans a day are dying of COVID, if 800 Americans a day are dying of COVID, there's going to be a limit to how good the economy can be. So that's step 1, and we really haven't done well as a country these last few months. Step 2 is we need to provide serious and sustained stimulus and support to demand in this economy. That's a matter of helping state and local governments. That's a matter of getting started on long-term infrastructure renewal. That's a matter of providing help to unemployed households. We need to provide the necessary support and demand to get a cycle going where people spend, so people hire, so people spend, and get that positive circle going. If we don't do it, we're taking a big risk. We're taking a big risk that we'll go back into a downward cycle. There's some hints of that already in the data. There have been some weeks when unemployment insurance claims have gone up gone back up again. So I'd say the priorities have to be, number one, get the disease under control. And number two, inject support into this economy. You know, the best of all social programs is a strong economy, an economy where businesses can't find workers rather than where workers can't find jobs, is an economy where businesses are raising workers' wages, working hard to provide skills to workers, reaching into disadvantaged areas in order to hire. It's the best social program we can have. And so a focus on strengthening demand. This is not the moment to be worried about the budget deficit. This is not the moment to be worried about inflation. This is the moment to be worried about absorbing the huge amount of savings that are out there and putting them to work as productively as possible. And if we do that, we can support the demand in the short run in our economy, and we can increase its capacity over the medium run.
Well, I can't say often enough that it's very early in the evening. We've got a long way to go before we know what's happening. But I'll give you another data point out of the markets, actually. We talked earlier about the equity futures market going up. We also now have a red headline out of the Bloomberg saying that the U.S. Treasury gap between the 5 and the 30 Treasury bond is at its widest point since 2016. You interpret that for me because you're better at it than I am. But I think that what that means is they think maybe what you're describing is coming.
I think that's probably right. You know, people say a so-called inverted yield curve when the shorter rates are higher than the longer rates. They tend to say that portends downturn. Exactly the opposite of that logic is when it goes the other way. It suggests that some set of things that are going to happen that are going to bring normality again. And so I think that this is a further corroboration of some sense of optimism. Now, look, if you remember 2016, David, the markets moved dramatically downwards through the evening, through sometime in the early AM hours. Futures were down the limit, 10%, and then at a certain point, it all turned. So the only thing dumber than forming a confident judgment based on some exit poll rumor is forming any confident judgment based on what the markets are doing through this evening. The markets don't know how they're going to be thinking 4 hours from now.